This question number 1 from the trial balance of Mr. X is given below. From this question number 1, we have to prepare the final accounts. It is not just preparing the final accounts. Better you can pass the journal entry and then prepare the final accounts. Passing the journal entry is nothing but a transfer entry. You have to finish up transfer entry. Transfer entry is otherwise named as closing entries. Closing entries. Let me finalize the items where it will go. Purchases will go to the trading account, debit side, trading expenses, carriage inward, trading expenses, administration, P&L account expenses, selling expenses, P&L account expenses, fixed asset, 12% investment asset. Okay, cancel the 12% here. I just eliminate this. Debtors asset, cash assets, opening stock, where will it go? Trading expenses, sales, trading income, capital, liabilities, loan liability, creditors liability. Is that okay? So we can pass the transfer entry only for what? These items we need to pass the transfer entry. Let me now pass the entry for the trading expenses as well as P&L expenses. The entry here being trading expenses transferable to trading account. For that the entry being debit, no, while transferring the debit should be converted to credit and the account where it is transferred will be debited. So debit trading account, so trading account should be debited. Trading account should be debited to what? Purchases, to carriage in, to opening stock, Purchases value being 5,000, carriage in 1,000, opening stock 1,000. So I have posted this one, this one, this one. These three over, right? The next entry is all about
7,000.
Yeah, 7,000 rupees, the total. The next entry is all about trading income. I'll pass for this trading income. Okay. Transferring the trading income to trading account. All the credit item while transferring should get debited and the area or the account where you are transferring will be credited. Right. Now, sales should be debited. Sales account. To what? Sales account debited to trading account. The value being 7,000. Next, now we will go for profit and loss account items. We have two expenses to be transferable to the P&L account. Profit and loss expenses transferable to P&L account. Entry being the debit should be credited and you have to debit what? The account where it is transferred. The account here is P&L account. It is going to be transferable there. So P&L account debit. 2. Admin expenses. To selling expenses. Admin expenses being 1,000, selling expenses being 1,000. Overall value being 2,000. Rupees. We don't have anything to be transferable from profit and loss income to profit and loss account. So only 3 entries.
Sir, closes.
Yeah, from the trial balance. So finally we have been given the closing stock also. For that we need to pass the entry. Closing stock. Closing stock. Closing stock is an asset. Asset should be debited always. So stock in trade account debit. Stock in trade account debit. And that will go to the trading account. To trading account. In the next illustration, next model, where the stock account is going to be totally handled in a different way, the next pattern. Let me now go with the basic model where the stock in trade is, closing stock in trade is transferred to the trading account, the value being 3000. So I have passed the entries here. Let's see here, sales. This is recorded from here. Admin expenses and selling expenses also recorded. And still we have some unticked account. That unticked account should be posted to the concerned new account. The new account being here trading and P&L account. So we open the trading and P&L account and this should be transferable there. Right. Now let's see here. Trading and P&L account. Trading and P&L account. Trading and P&L account. Trading and P&L account. And then balance sheet. And then balance sheet. Assets in the left hand side, sorry, right hand side, and liabilities in the left hand side. Debit and credit. Now, these accounts were already posted. Okay. Still unposted items are there. What are they? Fixed assets, investment, debtors, cash. All these things are assets. Simply write down in the asset side. That's all. It's not transfer entry. It's only recording. It will have the subsequent continuity in the next period also. So here the entry being fixed assets, value being 4000. Investments, value being 2000. Debtors, the value being 1000. Cash, the value being 1000. So we have now posted all the items in the debit side, available in the debit side of the trial balance. And in the credit side also we have these three: loan, creditors and capital. Loan, creditors and capital. Now, loan account, the value being 4000, and creditors account, the value being 1000 rupees. 1000 rupees. Is that okay? Capital, 5000 rupees. I will put that value in the inner column because we are supposed to adjust the net profit or loss. Wait. So with that we have recorded all these things. Closing stock also we have posted. If you are posting that into a journal entry, then it's already assumed to be posted only. Now the unticked item in this means journal entry should be now posted. In trading account, two purchases. It's now posted here. 5000. Carriage in 1000 rupees. Opening stock 1000 rupees. And here trading account is the credit side, means in credit side buy sales. This value being 7000. And here in P&L account, two admin 1000 rupees. Two selling expenses 1000 rupees. And in closing stock, there is an adjustment. So stock in trade, debit side. Stock in trade, debit side means, what does it mean? It's an asset. Asset should be posted only in the asset side. Remember, it's an asset. Should be posted only in the asset side. Stock in trade. This value being 3000. And in trading account, it's in the credit side, no? So in trading account, in credit side, we have to now post that as closing stock. This value being 3000. Close the trading account to find out the GP. Here the GP being 3000, right? That GP should be transferable to the P&L account. And whatever the net profit you get should be transferable to the capital account. Okay, this is the net profit. I will add here 1000 rupees. It's just a transfer. Rather than this, we can pass a transfer entry also. For the GP, the transfer entry being, transferring from GP is transferred from GP's account to P&L account. So I have to debit the GP account because it's a credit balance to profit and loss account. The value being 3000. Or simply you can name this way, trading account to P&L account. Trading account to P&L account. Is that okay? Then the P&L account is transferable to the capital account. So P&L account debit to capital account. The value being 1000. From here to here, it will not go automatically. Who told you that this balance will be transferable to the credit side? It's not a raw way. There should be a step. That step is nothing but transfer entry from the GP to P&L account. That entry is trading account debit to P&L account. And net profit, what you get is also going to be transferable to the capital account. You just name this being capital account rather than net profit. P&L account debit to capital. That's how you'll understand. Now, finally, if I tally the balance sheet, it tallies with 11,000 rupees, I think so, right? 11,000 rupees. Make a note of it.